Whether we get to a point where people are willing, I guess, for lack of a better phrase, to go out on a limb and maybe try something a little bit different than just, the Magnificent Seven stocks or whatever small basket that has sort of driven this rally.
Well, I think it's going to happen. The only question is when. We're in the only major business in the global macro economy where people hate bargains. Just imagine if Tiffany's posted a banner sign saying Christmas special, 50% off. And then across the street, you had a different jeweler posting a sign saying, uh, uh, particularly high quality, 50% above last year. And people were pounding down the door to get into the second store and fleeing Tiffany's in droves. That's the way the markets tend to function. People hate bargains because bargains got there by inflicting pain and losses. People love what's newly expensive because it got there by creating joy and great profit. And the result is you have things like Magnificent Seven is now, those seven companies collectively are now worth more than the four largest economies in Europe. Think about that.
Yeah.
Seven companies, which the market is saying are more important to the global future of the economy than the four largest economies in Europe. Now, I get it that Europe has regulatory regimes that tend to stifle innovation.
Yeah.
But still, come on. The other thing that's interesting is that value relative to growth is the third cheapest in history. The only time it was cheaper was peak of the tech bubble in 2000 and the aftermath of COVID in the summer of 2020.
Yeah.
So value represents an enormous bargain.
It represents an enormous bargain. And I want to go back, though, to your analogy about, because I thought that was good about the jewelry stores across the street from each other. As I'm sure you know, there's market psychology and the idea that if you see a crowd lining up outside a store or outside anything, you look, you want, oh, they must know something I don't, right? That must be the hot new thing. And we see that obviously play out in the market. And I'm wondering, is there ever really a historical, comparison where that wisdom of the crowds did truly gravitate en masse to value in a way where value became momentum?
Oh, yes. Think of the aftermath of the 2000 tech bubble. Value outperformed by over 1,000 basis points per annum for the next 7 years. In fact, Russell value was higher in the spring of 2002 than it was at the market peak in the spring of 2000. Value had gone up in a bear market. It suffered a short, sharp bear market in second and third quarter of 2002, and then it rebounded handily to new highs within 6 to 12 months. And in terms of relative valuation, it went from what was then the deepest discounts ever to the shallowest discounts by the summer of 2007, the shallowest discount seen since the 1970s, meaning that value was very fully priced. So value was momentum. Remember back in August of 2007, we had the quant crash where quant high flying stocks, which tended to be value, momentum, quality. These stocks were reaching high levels of relative valuation relative to their own history. And it was a value momentum market. Last year was a bit of a value momentum market. After a period of time, value was so strong that value was momentum.
Yeah, but the momentum for value seems kind of fleeting these days, and it's been a tough slog for value stocks in general. And one thing you point out is that while value stocks have had a big drawdown, the worst drawdown ever, value companies, their fundamentals are just fine. They're growing, and they're doing everything they're supposed to. How does the stock performance hold back the business, hold back the operations of the business then?
In general, that linkage is rather weak. It does impede morale. If you're working at a company that's doing just fine, but share prices are down, it impedes morale at senior levels. So that's one area where there is an interplay. But it's really interesting. If you look at the century to date, this century to date has been bad for value, mostly because of value's underperformance since 2007. But this century to date, the earnings on the Russell 1000 Value Index have risen more than the earnings on Russell Growth. The underlying companies have done better than growth. What a shocker.
Yeah, but you won't see it in the performance of the stock price. So how do you harness that better performance operationally in terms of
the
profits?
performance of the stock is a combination of the performance of the business plus or minus the changes in relative valuation. So when value falls out of favor and gets cheaper relative to its underlying fundamentals, the performance of the stock is poor, even if the performance of the business is just fine. That's been the pattern this century, most particularly from 2007 to 2020. We saw a wonderful snapback from summer of 2020 through year-end 2022. Yeah. And then this year came along and the AI narrative just took over. And with the AI narrative taking over, values underperformed growth this year to date through yesterday by 3,000 basis points.
Rob, very quickly here, speaking of narratives that are taking hold, the narrative taking hold in the market right now is the Fed is going to pivot and cut rates. You disagree. You disagree and believe that inflation could even finish the year higher at 4%. Make the case quickly here.
Sure. This is all down to a base effect. November and December of last year, we had deflation. Prices were going down, not up. In order for inflation to stay right where it is, we will have to see deflation in November and December. Now, Cleveland has a nowcast for inflation that suggests that this month will be minus 0.1%. If we return to the norms of the last 3 years with, let's say, 40 basis point inflation in December, that's going to take us to just under 4% inflation. I'm not of the view that the Fed is poised to raise rates again, but I am of the view that inflation is slightly more likely to surprise to the upside than the downside, and the narrative in the market is inflation's done.